President Donald Trump has announced a new set of tariffs on a wide range of U.S. trading partners.
Before we start, I want to let everyone know that this is strictly my opinion. All conclusions are based on my analysis of the global situation. Support your friend with a subscription and a like.
These tariffs, unveiled through an unexpected executive order on Friday, are set to take effect on August 7th. The order sets tariff rates for 68 countries and the 27-member European Union, with a baseline 10% duty on nations.
The clock struck for o'clock a.m. says today, August 4th, 2025, and the financial world woke to a nightmare. Copper futures plummeted 6%, bond yields surged. The Japanese yen hit a 5-week low, and allies from Tokyo to Toronto stared at a tariff map that screamed economic warfare. At that hour, President Trump signed an executive order tariffs ranging from 10% to 45% slapped on 72 countries, effective August 10th. No warnings, no negotiations, just signed decrees. The G7, redefined overnight. Canada faces a 40% tariff on non-USMCA goods. Japan gets 25%, South Korea 22%. Syria 43%. This wasn't targeted. It was a sledgehammer. In Seoul, tech executives were mid-meeting when the news broke. 20% on semiconductors, their lifeline to the U.S. market. Ottawa called it a stab in the back. Just last month, Canadian PM Justin Trudeau met Trump to ease trade tensions. Canada, the U.S.'s biggest treasury bear, now faces steeper penalties than China, which got 30%. Wait, what? Let's unpack this, because you deserve the truth, not hype. Over the past year, markets braced for tariffs, but this rollout defied logic. China, with a $310 billion trade surplus with the U.S. in 2024, faces 30%. Canada, with a $78 billion surplus, gets 40%. Japan, $69 billion, hits 25%. No clear formula. Brazil's 45% stings, despite a modest $12 billion surplus. Wall Street tanked to 0.5% at the open. Copper, steel, and tech stocks bled, but Boeing and ExxonMobil soared. Why? The fine print: countries buying U.S. LNG, planes, or debt can negotiate lower rates. This isn't trade policy, it's a shakedown, straight from Trade Rep Karen Hayes' lips. Some rates are set. Others depend on what nations bring to the table. Data backs this. U.S. LNG exports hit $45 billion in 2024, up 15% from 2023, per the EIA. But the real shock hit North America. Canada exports $580 billion to the U.S., 27% of its GDP. Autos, aluminum, timber all hit with 40% tariffs. Retaliation's possible, but the U.S. market is irreplaceable. That's the target. Here's the contradiction. Canada, buying $150 billion in U.S. Treasury's yearly Treasury data, 2024, subsidizes the U.S. $35 trillion debt while getting punished. Germany, France, and Japan, holding $1.2 trillion in U.S. bonds combined this year, now face 15 to 25% tariffs. The U.S. built a deficit machine, then taxed its lenders. IMF figures show U.S. debt to GDP at 125% in 2025, up from 120% last year. This isn't strategy, it's a paradox. Trump's plan: run the economy hot, force import cuts, plug the deficit with tariffs and foreign debt, and dare allies to walk. But one player isn't blinking: China. No retaliation yet. Vice Premier Li Wei's silence speaks volumes. Taiwan's 20% tariff on chips, South Korea's 22%. China's rivals take the hit. The U.S.-China trade deal, hyped as a win, cuts the deficit by $6 billion from $310 billion to 2% per Commerce Department stats. Not rebalancing, just less trade. U.S. consumers pay. CPI rose 0.4% in July, with medicine up 9%, BLS data, thanks to 39% tariffs on Swiss generics. $11 billion import value. Now, the third country rule: 40% on goods transshipped via allies like Vietnam or Malaysia. Supply chains froze. $30 billion in goods on ships face retroactive taxes. Commerce says rules under review, but that's chaos, not policy. Meanwhile, BRICS moves fast. At the July 2025 Cairo summit, Iran, Egypt and Saudi Arabia joined, and currency swaps doubled. Russia-India trade is 45% rupee denominated. Brazil-China soy deals hit 75% yuan, BRICS bank reports. In 2000, BRICS exports were 10% of global totals. By 2024, 24%, G7 share fell to 28%. By 2027, BRICS may lead. Per World Bank projections, tariffs could accelerate this by years. Europe and Asia adapt. Germany's BASF India for a $5 billion plant. Japan secures uranium from Kazakhstan. It's not decoupling, it's redirection. Trump doubled down. On July 31st, he scrapped the $800 de minimis exemption. Every trinket now faces full tariffs. Walmart warns of 10 to 15% price hikes by Q4. Inflation could nudge the Fed to hold rates at 4.5%. Fed Minutes, July 2025. Trump posted on Truth Social, August 10th stands firm. A win for America. But a $28 billion bond auction failed August 2nd. Foreign bids at 57%, a 7-year low Treasury data. That's not a win, it's rejection. The U.S. taxes surplus nations while begging them to buy its debt. China's UAE trade surged 12% in Q2, Chinese ministry stats. India-Iran rupee oil deals bypass SWIFT. The dollar's share of global reserves dipped to 57%. IMF, 2025. Not a collapse, but a drift. Corporations flee. Samsung shifts assembly to Vietnam. Intel eyes Malaysia. Trump's answer. Tariffs on digital services and data flows, but leverage leaks. This isn't about rivals, it's about relevance. The danger isn't economic collapse, it's lost consent. Allies like Canada and Japan, funding U.S. debt, now hedge elsewhere. BRICS isn't replacing the G7, it's building anew. You, our viewers, crave this raw insight. Hit like if you're with us, subscribe for more unfiltered takes. Let's decode this chaos together. Before we start, I want to let everyone know this is strictly my opinion. All conclusions are based on my analysis of the global situation. Friends, support my channel. Give this video a like, it will be a huge motivation for me to post several videos every day. Thank you. The clock struck 4:00 a.m. CES today, August 4th, 2025, and the financial world woke to a nightmare. Copper futures plummeted 6%, bond yield surged. The Japanese yen hit a 5-week low.